Hello, everyone, and welcome to the Your Mark on the World show. I'm your host, Devin Thorpe, and our guest today is Scott Hill, the president of Clean Energy Advisors, our sponsor. Scott, welcome back.
Thank you. It's good to be here.
We're thrilled to have you and appreciate the opportunity to visit with you today. I think it was a great suggestion that we talk a little bit about how your firm is turning sunlight into an income stream for investors, because I think that's really an important concept for people to understand at this point in the trajectory of the installation of more solar. Helping people understand how they make money on this is just vital, and it's exciting because this has such a positive impact on the environment. But I guess that the premise of solar power is simply that the fuel is free, right?
That is. I think that's the most important component of the entire project, is that there's certainly no cost to drill for it. It happens every day, and if it doesn't, we are all in serious trouble. But assuming that it's going to continue to happen for hundreds, if not thousands of years, I think it's a resource that we can tap into pretty quickly.
Yeah. And it's exciting. You guys have kind of perfected the model. So once you have the kind of the free fuel component, you need to put up a solar project. And so your role is to gather money from investors that you then put in a project, right?
Yeah, I think the first part of the puzzle is really to identify a project that's worth doing. There are at this point of the game, there are hundreds, if not thousands, of projects out there that people are trying to get their hands on, or they're trying to identify and vet to make sure that they are viable projects to do. So that really all starts with either a piece of land or even a commercial rooftop or a home. Once you identify the idea that there's a possible project to be done, and for us, it's all about identifying a solar photovoltaic project. So it's solar panels fixed on something, whether it be a roof or in our case, it's always vacant land. We're looking for farmland. We're looking for what we call small utility scale type projects, where if it's over 2 megawatts in our case, and ideally, let's say in the 5 megawatt range, we want to look at those projects, and we're continually daily, if not weekly, identifying potential projects for us to do. What makes us unique, I think, is that we've really identified a unique market, a unique opportunity, in particular in the state of North Carolina,
right,
where we identified a pipeline of projects that are worth doing, and that's where we are.
So, Scott, how much land is required for a 2 megawatt project in North Carolina?
It can depend on the topography of the land, but usually it's between 5 and 15 acres.
Okay. And how much does the land cost in terms of proportion of the total project? How much of the cost is land versus solar panels and other costs?
It's minimal. What we do is we lease up the land. For our projects, we found it to be a successful model for us to enter into a long-term lease with the landowner. It's a very fair lease for us, and also a very fair for the landowner in the places that we find projects. Typically, there are rural areas and in counties where these landowners have had this land either for a short period of time, but mostly a long period of time. Maybe they worked the land or farmed the land in the past, but they like the idea of signing a 15 to 25 year lease for a fair price per acre, and then that allows us to build on that land for that period of time.
I see. Now, are you financing these projects individually, or have you gathered a fund that you then invest in the projects?
Yeah, we prefer the fund environment for the types of projects we do. I mean, there are certainly very large projects out there being done on their own where investors are coming to the table to take a portion of that project and it stands on its own. For us, we've identified a group of projects that are 5 megawatt projects currently that we put inside a fund structure, and it's just a really straightforward GPLP fund structure.
Right.
And,
so how big is the fund?
the current fund is $150 million, and that really is roughly 19 5 megawatt projects. And currently CapEx on these projects is roughly $8 million. So our fund has a pipeline of projects all pre-vetted and shovel ready. So as we gather enough investor dollars to deploy a project, then we simply go on that project.
But the investors all end up owning an interest in the portfolio of projects, right, so that if something happened, heaven forbid, a meteor took out one of the projects, the investors still have the interest in all of the others. They do, and we certainly have very comprehensive insurance on all of those projects to protect against things like that, but absolutely they own a percentage of the entire portfolio. So it really creates a nice diversification within the constraints of solar power, but they're not taking any idiosyncratic project risk really by having a portfolio. So I see how that works. Yes. What are the minimum investment requirements for your investors? So our minimum investment is $100,000. It's a private placement fund, which means it's open only to accredited investors. But that's in and of itself a interesting development in this industry. Most of the projects that have been done in the past have really been for institutional investors only. But we were one of the first, if not the first, to bring out a fund that got opened up to a much larger group of investors. Now, investors don't have to be located in North Carolina in order to participate, right? They don't. I mean, they don't have to be in the United States for that matter. It's certainly, there is an advantage to being in the United States because of the way our fund is structured. There are some tax advantages to what we do. So a U.S.-based investor who has tax obligations can benefit greatly from the kinds of things we're doing. Oh, that's great. Well, let's talk about the way this works sort of going forward. So the money comes in, you've got the fund, you build the project, you sell the power. Let's talk about where you sell the power. Okay. I think all of your off-takers are utilities. Is that right? That's right. Currently, we have one off-taker, and it's Duke Energy, and they purchase all the power that we create from our projects, and we sell that power to them. Are they required under North Carolina law to buy power from you, or do you have to negotiate with them on each project? They are. There's a small power producer program in the state that mandates that as long as the small independent power producer does not exceed a certain megawatt project size, that they are required to enter into a long-term PPA contract. Does that law stipulate what the price per kilowatt is, or do you get to negotiate that? It does. It's called the avoided cost rate. So Duke is required every couple years to go before the State Utility Commission and define what the avoided cost rate is, which is the lowest cost they can produce power. And once they do that, and the commission, they both agree that that's the rate, then that's where the small power producer program enters the equation, and that's where Duke then starts signing agreements at that avoided cost rate. And so when you do a project, let's say January 2017, you'll set a rate for that. Will that rate last for 25 years? Will it last only until the next avoided cost rate is established with the Public Service Commission? No, that's a great question. The contracts that we sign, they are good for the entire life of the project. So they do not reset every 2 years. So, in our case, we are working with contracts that were signed years ago, not a long time, but where maybe 2 commissions ago they had defined what the avoided cost rate was. Then we entered into those agreements. Most times we're acquiring projects. We're not the ones that originally entered into the PPA contract, but other developers, other
possible solar interests entered into those contracts, and then we purchased the rights to those agreements.
I see. Well, this is a great model where you've got just one customer. Do you ever look at projects where the customer would be a commercial enterprise that just needs a lot of power and take the utility out of that?
Yeah, we've identified close to $800 million of the types of projects we're currently doing. So, we're obviously going to stay focused until we can execute on, if not all those projects. I mean, that's a very big opportunity for us. And we get to tell the same story. It's very predictable. Each project is almost identical. So for us, it's a very consistent message that we get to deliver. And I know that you interviewed Jason Loyette a couple weeks ago from Solar Site Design. He's developing a marketplace where those types of projects will exist and those opportunities will exist. And we're certainly strategically aligned to Jason and his company. So in the future, we think that those are some very interesting opportunities for us to explore.
Interesting. Well, it is a fascinating model. And so you enter into the PPA agreements. You've got these for 25 years. The cash comes in. You're pooling the cash. Let's be clear about what's happening in the current stage. Are you both fundraising and making distributions at the same time? It seems like maybe you're in that mode.
Yeah. So our portfolio of projects inside of our fund, the fund's got a rolling close to it. So as we generate enough investor dollars to execute a project, we go immediately on that project. So let's just take the example of our current fund. We currently have already deployed $60 million plus of dollars into that fund, and the money that's been deployed are into projects that are currently in service generating revenue. So those investors are getting their quarterly distributions, and as we continue to execute on the pipeline of projects within the fund, it just continues to roll until we develop all the projects within the fund.
Okay, so the investors all get a tax benefit, and this is a little bit complex, but the way you've worked this out is rather than have your investors take the investment tax credit associated with, or the income tax credit associated with the investment at the time they make the investment or when the project comes online. Instead, they're getting that benefit over the first 7 years of the investment by virtue of having that be tax-free. Do I understand that correctly?
Yeah, that's correct. That's sort of the innovation we brought to this industry. Back in end of 2013, the costs of solar projects were coming down to a point where we could start to have an economic discussion around these solar projects. It wasn't the profit or the dollars associated with solar projects didn't depend, in other words, on the tax benefits. So then you could get a little bit more creative. And so what we decided to do is, in the traditional format, at least on bigger projects, there was a tax equity player. So because the developer didn't have the need for all the tax credits, they would simply go in the open market, and they still are, and trying to monetize those tax credits or sell the tax credits. For us, our investor base, as an accredited investor base, they can use these tax credits, and we found a way to layer them over top of distributions so that our investors get 100% of the benefit of these tax credits.
I see. So for the first 7 years of a 25-year payout, they're getting the cash flow tax-free. After that, they're paying at their regular tax rate on those additional distributions. But in theory, they're getting a big return in those early years where there's no tax.
Yeah, I mean, we're really proud of the fact, and we've certainly had some investors who really believe in it and enjoy the idea that in today's low yield environment where people are really struggling to find predictable income type investments, that there's an investment like ours out there that they can get an 8% predictable return, and then on top of that, it's offset at the federal level. So that's a pretty intriguing thing for some of our investors.
Yeah, so you're saying that you can get a tax-free yield of 8% for the first 7 years.
That's right.
That is an amazing yield, especially considering the project diversification and the consistency, the contracts. You've got, a AAA rated buyer, right?
That's
For
right.
the
Off-taker. Yep.
the off-taker, and then you've got the project diversification. And so it seems to me like this is a really good investment opportunity for folks. At what rate is the utility buying power on average? I realize you've got multiple projects, but you probably have a handle on what the average rate per kilowatt hour is.
Yeah, the projects that we're doing now are just under 7 cents a watt. There is a capacity credit that's included and negotiated to raise that some, but like we were talking before, I actually was in a meeting yesterday with a guy who, as I got done talking about what we're doing, he said, "So it sounds like you guys have created an infrastructure and investment, much like you would a real estate project where there's an economic return. It's not based on the taxes to create the return, and the taxes are sort of icing on the cake." And so that's one way to look at it, where we've been able to define projects that fall under a very important per watt install rate, and then the tax benefits can be something that is additional to that.
Well, it's a wonderful, wonderful opportunity. I appreciate you taking the time to walk me through step by step the mechanics of your investment opportunity. It's really a fascinating place to play, and it's exciting to see what you're doing because you're really starting to help scale up the solar industry, and it seems to me the impact on all of us is huge. Even if we're not participating directly, just knowing you're out there doing this is great.
Yeah, no, it's not hard to get up in the morning doing what we're doing.
Yeah. Now, Scott, before you go, tell us how people can learn more and connect with you personally.
Yeah, I think the best way probably is just to go to our website. It's cleanenergyadvisors.net. We're certainly on some of the social media platforms. Twitter's a good place to look for us. But I think in order to get in contact with us, I would suggest you just go onto our website. We've obviously got a contact form. There's phone numbers to reach out to us as well. But that's probably the best way.
Okay, great. Well, Scott, thank you very much for being with us today. We appreciate your support as a sponsor and wish you every success in filling this fund and doing more projects.
Thanks for having us, Devin. We appreciate the work you're doing.
All righty. Let's do some good.